The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Friday, the 19th of June. Happened to be my father's birthday, and he was born a long time ago, 1907. Boy, he would be, how old was he be now? Yeah, well, that's pretty old. Anyway, I posted the chart of IBB. That's the banking index. No. That's the biotech index. And as you can see, we went sideways for about 10 days when the rest of the market was correcting into June 8th. And now the market has exploded to the upside, giving us a target of around $400. That's basically another day like today, or like yesterday, and you'll be there. That's the big ABCD pattern that happens to be on that particular index that we're looking at. Now, these indexes are really up into the stratosphere, as you can possibly see. People don't remember, people never remember the past. That's why they repeat it so often. And this happened back in 1999 and 2000 when we had the internet bubble. And that was really a bubble because these stocks were opening $50, $100 higher. And one of my stories that I tell is my good friend Greg Asoff in San Diego is a real estate broker. He and his brother, they have a huge business there right outside of San Diego County in Rancho Santa Fe, which is one of the richest places in the United States to live. They do a huge business. And during 1998, a lady came to Greg asking him for a job. She had had a divorce, and she had a young son who was 19 and wasn't going to school, and she didn't have any means of support, and so she begged Greg for a job. He trained her. He made her eventually, over the next couple of years, her chief loan officer. And her little son, in the back of his garage, opened a little computer outfit. I don't know exactly what it was. It was called Sycamore Networks. It was listed on the NASDAQ. And when it came out, the stock, I think, was in the hundreds, as I recall, because his mother, he had gave his mother, I don't know how many shares, but it was around $5 million. And she came in that morning that the thing was the IPO, and she announced to Greg that she was quitting, and this was her last day. And he said, well, wouldn't you at least give me a couple of weeks to train somebody else? And she said, F for you, I don't need the money anymore. And I just checked Sycamore Networks today. Guess where it's at, folks? 33 cents. So I hope she still has her shares. Probably does. Maybe she doesn't. That's not important, but the important thing, she certainly didn't remember people that helped her when she really needed it. This is probably going to happen again with some of these stocks that have these great biotech things that don't work out the way they think they're going to, but who knows. The Shanghai market was off 6% overnight, 6.5% on a Friday, and the Chinese government is thinking of ways to stop the speculation. Good luck with that. And imagine closing on a Friday like that is really it's down 10% for the week, is usually not a very good thing, because the people have a lot of trepidation, and if something doesn't come into the market to make it really strong on Monday, it has a tendency to melt down after a big move like that, because 10% in a market like that really doesn't mean a whole lot. $1 trillion, I guess, is all it was. Used to be a lot of money. Evidently, it's not anymore. There's several charts here that really look interesting to me from a technical standpoint today. The first one, of course, was the IBB. I've never traded it, don't even know what's in it. I just watch people watching it, and it's always reported. So that's the key. But there is one that we watch all the time, and that's the IWM, which happens to be the Russell 2000 small cap, which is also breaking out into new high ground. This has a really interesting pattern because we have a big butterfly pattern forming right here at the 1.27. That comes in at around 128 and change. It closed at 127.92. So I would be expecting to see some resistance up here between 129 and 130. 130 is the 1.618 move, and that would be a move like we had yesterday, taking it up into today. But you look at the pattern. patterns that you have there, you have two ABCD patterns, a 3-drive to a top pattern, a butterfly pattern, a long-term ABCD pattern from October through December. And this is a really big pattern. I don't know if it's going to work or not, but this is Mother God and Country stuff, folks. You got to be looking for a place to reverse on this one, because it should have some type of correction. The last time we had a correction was last October, when we had a 10% correction, and that was the first time we had one of those since 2011. So all these patterns are completing right here in the IWM, as I see it, right around this 128 to, well, 129 to 130 level in the IWM is what it looks like. The banking index, I'm not going to post that one because we already know what it looks. Well, we should post it because not everyone knows what it looks like. That's the way we should do it. So let's just do it that way. Only takes a second to pull that banking index up. Triple witching used to mean a lot, you know, with options and everything expiring today, but frankly, I don't know if it does anymore or not. We'll have to, you know, just have to wait and see here. But as you can see with the banking index, we had that 20-min line that acts as a fulcrum, you know, to put the market, you know, sharply higher, and we've certainly done that. We're completing the ABCDs of that target there for where the 20-min line comes out. You'll see where the butterfly pattern completes up there at point D. If you're watching Tiger TV in here, that's what we're looking at. Now, we were down on Wednesday, up on Thursday with the Federal Reserve, you know, doing the thing everybody was buying. That was a, you know, foregone conclusion that everybody had to own stocks, and that's what's happening. We're having an interesting opening this morning because I'll show you the pattern that we're looking at in just a minute, because it's really clear to me. Unfortunately, I'm the only person that sees it, so we have to be really careful here. The old thing about Henry David Thoreau, if you was about the mice walking. Oh, if you were the only person in the crowd that I can't remember the quote exactly. Darn it, I used to remember. Oh, if you're the only person in the crowd that sees something, you're probably not seeing it clearly. That's paraphrasing it, but I'll figure out what the quote is at the break. But that's basically what it is. I'm probably the one in a room that's wrong. I listen to these people on the what you call it. What was the heck the name of that guy? Well, one of the folks on Bloomberg this morning was giving a indication of you know, what the Fed was doing and stuff like that. And, you know, I don't believe that the Federal Reserve is manipulating the markets in any way, folks. I really don't. I believe markets operate naturally. They have to. It's natural law. If it didn't, we wouldn't see these patterns and Fibonacci numbers everywhere like we do. Unfortunately, they don't work all the time, but they work a lot of the time. And it certainly proves that the markets are chaotic in nature, but within that chaos are non-random patterns that repeat over and over again. You see that on every chart that you look at. If you look for it, it's going to be there. I mean, the market never does anything different. It always does what it did in the past. It always has, and it always will. I don't see how it can be anything any different. So the banking index, you can see that one is completing also. These are the ones that have been leading the market: the banking index, the IBB, and the also the IWM, which is the small cap market also. Now, all during this rally that we had, give me 1 second here, I wanted to bring up the wanted to show you the advanced decline line from yesterday, because it also was very interesting. Oh, Larry, where did you put it? Well, it's here somewhere. I'll have to find it. I got too many things on this computer trying to do this show. I try to keep it interesting, and I'll be darned, sometimes I just can't get everything working right, but we will find it somewhere. I'll get it running here in just a minute, and we'll see see how it looks. Okay, now the next chart that we want to take a look at here is the we're going to switch over and do the Treasury bonds and Treasury notes, because I think that's going to be the real interesting one that we're watching. We have a situation here where we got a pattern forming that is really interesting here in the Treasury bonds. That's the expanding wave triangle pattern that we look at, the 1, 2, 3, 4, 5, and it's coming in at a retracement of really good 618 retracement of the whole thing very, very shortly. So we want to watch bonds here. Bonds are bearish, folks. I mean, there's just no question about it. We've been in a rally now since the 10th of right when Mercury went retrograde back to direct. We've been in the same rally here, and we're looking for about 153. We're trading about 151 and a quarter, half right now. Yesterday's low was a perfect 61% retracement of the low from the 10th. I mean, that was another reason to think that stocks were probably going to go higher. We made a 61% retracement in the S&P. The NASDAQ didn't retrace hardly at all, and it just literally just exploded out of there. And of course, the bonds started to move also, so everybody was buying risk-on type stuff, and that probably will continue. But the bonds really have a strong pattern up here at the 153 level. That's an ABCD pattern coming off of a major bear market. If you remember back when those bonds were 57, that was way back in May. The market broke really badly, and we went from 57 down to 47, 10 handles, which is a huge move in bonds, and now we're rallying back. And if it's correct, 10 handles, 61% of 10 takes you to 6. You add that to 147, and that takes you to 153. So around 153.16 is around 153.04 is where you want to be looking for a potential to go short the bonds, because that would be the first major ABCD correction. Oh, that's not true. We had another one back at 155 for a little bit, but this would be really the largest of the ABCD corrections since the market topped way back in May. And interest rates are going higher. It's just a question of when, and the Federal Reserve is telling us very nicely that they're going to make it easy for us, and you don't have to worry. It's going to be gradual, and everything's going to be okay, and I'm sure that's what they're planning. But sometimes the best laid plans of mice and men are a little bit different. Now, I remember that one. That was John Steinbeck. However, let's go on to the next one. Let's take a look at the big market, which is the Treasury note market. And that's even clearer to me, because we've got a situation that we're looking at that looks very, very similar to this. Now, this is a 4-hour chart going back 6 or 7 months. Well, actually, yeah, it's 7 months, and you'll see that we've been in this really strong downtrending market for quite some time, and we're having another really good rally off the bottom where we made the double ABCDs down there to 124, and that tells us that we're probably going to get up somewhere around 126.5 to 127 in the notes. Still in a bear market. You're going to have lower tops ever since 2015 in January. You had a lower top in April. You had another lower top in June. That's the one that, it was actually late May, the one that made the ABCD that was so bearish that we were talking about in the market gap that next day a couple of points, and that sent the market into a spiral down to this level where we are right now. So we're going to take a break here. We've got gold down or up $1 or so, silver down quite a bit, and we'll see what happens in the next few minutes.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted into Tiger TV the chart of the New York Stock Exchange Index. I believe it's a hourly chart, as I recall, and what I would like to bring to your attention here is that we are completing a perfect Gartley pattern. I mean, this is a textbook, folks. We made the 61% retracement on June the 8th. We rallied up to the 786 retracement of 0.3. We came down on the 15th, and then we've had this big rally for these last several days that has taken the NASDAQ into new high ground. It broke the record from, I think it was, this is the big NASDAQ from 2000. It did go into new high ground, and many of those stocks like Sycamore Networks, they're not around anymore, but other stocks are in there, so that excuses it a little bit, but it's still making new highs. But we've not made a new high in the Dow Jones. It's only retraced a 61% retracement of the May high. The S&P futures and the S&P cash have both gone above the 786 level, and part of that reason, of course, is in the S&P are the NASDAQ stocks, and then you have the 30 Dow stocks. So 530 stocks are the ones that are, well, actually there's 540, I believe, when you consider the Dow, the NASDAQ, and the S&P. 530 stocks are making those indices look a lot stronger than what the real market is. I know you might think that I'm full of baloney, but I look at this New York Stock Exchange religiously over the years. It's never let me down on what the market is really doing. As you can see, this is the first Gartley pattern that we've had since the market topped when Mercury went retrograde on the 18th, and they had the new moon on the 18th of May. This is the very first one. I know it's brought on by the Federal Reserve, and everything looks good, and it should look good. I mean, she basically basically told you we've got your back. You know, why would she ever lie to us? And I'm sure she's not lying. What she's not seeing is that there's a liquidity problem out there that's going to come her and bite her on her keister. And I think that someday you're going to be looking at her in front of a Senate committee wondering why we did all this stuff. And it wasn't her that did it. It was Mr. Bernanke. All she was doing was following through. That's my 2 cents worth. I'm off my soapbox now, and I wanted to continue on with the New York Stock Exchange Index and what it's doing here. We did make a perfect 61% retracement of the May high yesterday. That means if the market is really strong today and also again on Monday, which we have a key date on Monday, the 22nd, then we will be looking at something, and that's also the first day of summer. The solstice starts then, so we will be watching that with a great deal of information. And then we'll see what happens with the rest of the markets as we're going through some of these things, and we'll see what's going on with those things. Okay, the thing that I'm really watching closely here, along with this New York Stock Exchange Index that we have here, is the advanced decline line that I always watch. In other words, the number of advancing issues versus a number of declining issues. And you would think that that would be a sorry for laughing, folks, but I get these messages from the people in the Tiger Room, and one guy said, you need a soapbox, a new soapbox. He's probably right. Well, I'm sure he's right. But if you can see, this advanced decline line that we have here is still in a major downtrend. We're making a small ABCD pattern in the advanced decline line also. So that also is not a bullish chart, but the market is interpreting it as bullish. So you have to certainly, you know, pay attention to it from that point of view. This is the key to watching some of these, I think, because these markets jump around quite a bit, and you don't want to, you know, stand in the way of it. But you've got basically 3 markets that are pulling things higher. You've got the NASDAQ, you've got the IBB, the biotech index, and of course you have the IWM as a small cap. And this is a small segment of the community, but that's what we're looking at. So we'll see whether that's going to be see what's going on. So we'll wait and see what happens on Monday, but the market should have a little bit of follow through today, considering you think that how much it was up. But we did the same thing the other time that something else happened. And believe me, I don't think this thing with Greece means anything at all. If I heard someone today mention that seemed to know something. I mean, they talked pretty eloquently about it on Bloomberg, that even after June 30th, when the deadline comes, they have an option for 30 days. And you know, I don't know. You know, if the person owes you enough money, they're not your creditor; they're your partner. That's an old, you know, that's an old Italian adage that sticks in there pretty good. So that's one of the things that you want to, you know, keep in mind about the Greek thing. But the market will react to it. The German DAX moved equivalent of about 1.5% in about I think about 4 or 5 seconds yesterday, when they announced that the Greek thing had been done, and then it wasn't really done. So we'll be right back after these few words. And we've got gold up, silver down, and stocks are going to open a little bit higher, it looks like.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the chart of the DAX index, and you can see what's happened to it. This, I believe, 4-hour chart, and you can see that it is had a heck of a run here from the bottom that we made where that ABCD pattern had completed. And you'll notice that big spike that was in there. That happened in a period of about a matter of seconds yesterday. I happened to be watching that. I was not involved in it, but it actually, had one heck of a move, over 100 points in the DAX, which is equivalent to $2,500 in S&P points, because the DAX has a margin of 20,000 euros, so it's quite expensive as margin goes. It's the most expensive of anything that we have, but it certainly has beautiful trading capabilities because it follows the numbers of the Fibonacci summation sequence quite well, and that's the important thing that we kind of want to keep an eye on. Now, I want to switch over here to gold and silver because we hit important targets yesterday. If you'll take a look at this 4-hour chart on gold, it's I showed it as an hourly chart, folks, and it's not. It's a 4-hour chart. I forgot to put the 4 in, but we did complete the Gartley at the 61% retracement yesterday in the gold. If you'll notice, silver just barely made a 382 retracement off of the June high. It couldn't even come close to a retracement off of the May high, so silver is acting very badly, and it's doing the same thing today. Silver's down on the day, whereas gold has at least gotten unchanged on the day. Now that might change. It could certainly change, but right now there's not many people wanting to buy the silver. But as you know, once silver gets going, it goes pretty good. We did hit our objective yesterday in silver at 1639. It got as high as 1643, and then sold all the way back to it dropped off, I believe, 50 cents an ounce. And so it's quite a bit weaker than gold, but that can change, as I mentioned, very, very quickly. If we can get gold above the 1218 level, then it's got a really chance. And if we get it above 1232, folks, there's blue sky above that. I mean, if gold ever gets above those highs of May 15th, it's going. I mean, it's going to go far, because it means it triple tested the long-term Fibonacci number down there at that 1150, 1160 area. And that means it's got enough oomph to go a whole lot higher. Whether it's related to a weaker dollar or not, I don't know for sure, but that's really what we're keeping an eye on here when we're watching the gold and the silver as we look at these things. Now, I wanted to talk just a little bit about the currency markets, because we have a situation right now that's interesting in the currencies. This is the kind of trade that I like to do. So I just want to show you what this looks like right now, because we have a real interesting pattern here in the British pound versus the US dollar. Give me 1 second. I want to show it to you, because we had a really lovely buy here in the Gartley pattern at just about let me see, it was about an hour or so ago, and now we're having a pretty substantial rally here, coming up to the 61% retracement of this move. Now, this is the kind of move where I would have I didn't get to buy it because I was busy doing other things down there, but I would really be interested in selling this. And the reason why is on the long-term dailies for the British pound, we have a situation where the market has been going up for so many days in a row that this is the first really good correction that you have, that you can safely sell it without risking very much. So if you take a look at the longer term British pound chart that I show in there, you'll be able to see the ABCD pattern very, very clearly, where the 10 days up are. And now we had the 10 days up yesterday, then we had the back off early this morning. We still have not made a lower low than the previous day. That's down quite a bit. But what's happened is we've completed a bullish Gartley this morning, and now we've made the rally back at the 61% retracement. The way I handle that is I sell it here at the 61% retracement level at this 158.90 and change, and then I put a buy stop on this one, because it's so near the high. You don't have to risk much above that high, so I'll risk about 30 pips on that, and which was equivalent to about $200, and I would put a buy stop at around 159.10. The old high is 159.30, so we could easily get to 159.90, and the reason that is important is because that's the 127 of the BC swing, so you don't want to risk very much at that level. But at 158.90, that's where you want to take a look at it from the short-term basis. And this is what my real forte is in trading. I watch these short-term swings, and I'm watching 6 or 7 things, and they're very, very good. These long-term forecasts that I make in the stock market, some of them are okay, but some of them just don't hold water. The one I'm looking at now is as clear as a bell, folks. I mean, if you believe in H.M. Gartley, and you believe in Leonardo da Pisa, the Fibonacci, and Pythagoras, and all those other dudes, Da Vinci, then you got to take a look at this thing on the short side in stocks, either today, if you want to be safe, do it Monday. In fact, you might get an explosive move to the upside on Monday due to the Greek thing occurring, which might be even a safer place to go, long or short. But I don't think the Greek thing really is going to make a lot of difference. I think they're going to do something to keep them in there. That's my guess. The money that they're talking about is certainly peanuts, at least from the numbers that I've heard bantered around. My goodness, I mean, J.P. Morgan paid about 4 times that much in fines, keeping the people out of jail. So they certainly ought to be able to do something for the country of Greece. But one doesn't know, so we'll have to see what the market's going to tell us with that. Now, I wanted to spend a little bit of time here with soybeans, because we've had a heck of a rally here in beans. And give me 1 second. I want to put up the current chart, because it's so much easier to explain than looking at the at the old one, so just give me 1 second to get November's up. I had July up by accident, and that's not what we want. And there we go. Now we've got the bean chart up. We've had this really nice rally, and we'll just pull this up here and we'll take a look at it right here. This is what you look for. So I don't know what's going to happen. Andy Hecht talked about this a little bit with Tom, and I thought it was interesting. But the beans have definitely completed that pattern down there that we were watching for March. Let's try May the 26th. We rallied about 20-some cents, and we came down and made a new low, a little fake out low by about a penny, pretty much a double bottom. And then the market has rallied 50 cents a bushel. We got all the way up yesterday to the 946 level, and now we're down a little bit today, which is what you'd like to see. And you want to be watching for the ABCD move to the downside in the beans. Now, I'm going to put up a 30-minute chart so we can see it a little better, because I want to be able to, just so that you can see what we're looking at here. And we'll get the price levels in so we can watch it. I want to put the pattern over here, so there we go. Now all I got to do now is to put the levels in, and then you'll be able to decide this as we go through. Oh, this would be really nice. Okay, here's the one we're looking at. This is what you want to see. You want to see, this is a 30-minute chart in beans, and the high was at 946. Now that ABCD pattern you see in the middle of the chart, that I don't know where how it's going to end up, but what it's telling us is that we want to be watching for that pattern. This is a chart that's gone over a week, so in 3 or 4 days the market was up for 5 days, so we should get a 2 or 3 day correction. See, we got Monday, Tuesday, Wednesday. On Wednesday we really want to be watching beans to see what the correction is, because if the beans make a 61% retracement, that's 20 cents from where they are right now. That means you could buy them at the 915 level and just risk 10 cents and put a stop below 905, and you would have a pretty good chance to be a farmer for soybeans for the coming crop. This is not much of a rally, folks, in a bean market. That's only 50 cents. Corn rallied even less, wheat even less than corn. So the markets are still in very vicious bear markets, but this could be the first chance of a really big rally in beans. And this is the time of the year that it usually occurs, sometime near the 4th of July. And that's when beans start to really, their real pollination time, of course, is in late July, early August, but the market anticipates this stuff ahead of time, so we really want to be watching soybeans from this level, very, very quickly. 1 second, please. I need a drink of scotch. Oh, wait, no, that's water. I've actually never tasted scotch or bourbon or any of that stuff. I've tasted a little wine once in a while, but that's pretty much what we're looking at. Oh dear, we got another question about the Apple. Everybody seems to love this stock, and I guess they should. It seems to be, one of the best. There's another stock that's not acting as bullish as the rest of the market. And when you consider how much free advertising they get every day, I would think this stock would be at 170, where Carl Icahn would like for it to be. So that's another indication that the market for Apple is not quite that good. I noticed that the new IPO that came out yesterday, Fitbit, was priced at 20, came out at 31, and so the company, instead of being worth $4 billion, was worth $6 billion, which I think is a wonderful way of showing how well democracy and capitalism works here in the United States. So that's another thing that's fun. Hey folks, there's one other thing I need to talk to you about, and that is, let's say that I'm 100% wrong on these stocks. Now, we caught the move down between May, the Mercury retrograde and Mercury direct. That was a pretty nice move. That was from May 18th down to the 8th of June, when we hit that bottom exactly at the 61% retracement in the S&P and the Dow. It was just spot on. You couldn't be short stocks if holding like that. We retested it again on the 10th, which was Mercury direct. And now we've had a 10-day rally. From the 8th to the 19th is 10 days, so that's usually what you'll get in a bear market. That's what it's showing us in the New York Stock Exchange Index. I'm bringing this question to you because you have to think about this, is what is if I'm wrong, and how do I know I'm going to be wrong? I'm going to be knowing that I'm wrong by Tuesday of next week, because if the market is really strong and we are blasting through new highs in the S&P above 2134 in the S&P, where it's about 20 points from where it is right now, then that's the case where we would be looking at the spot for a maybe a blow-off top, maybe even going higher and higher. But we're seeing tops, at least objectable tops with patterns in the IWM. We have a top possibly in the IBB up another $15 or $20. Stocks like Goldman Sachs, oh my God, they're yelling. They're standing up in the middle of the hall and yelling, sell me, sell me, sell me. But everybody's in class and the teachers won't let anybody out to listen. But boy, that stock really needs to be sold at the 214 level. Whether that's the case or not, one has to wait and see. Certainly, if it gets above 220, I would think I would be wrong with that. So that's what we have going on right now. I think the market has, I haven't even checked the open. My goodness, I've been having so much fun here today. Let's see what's going on. Oh, the market's selling off a little bit, not very much, but we'll see what happens. This maybe yesterday was it. That might have been the last hurrah. That's where the New York Stock Exchange Index said it should have stopped. I don't really know, but all I know is that this is a kind of pattern that you live and breathe for if you love this kind of stuff, and I certainly do. I remember when I first got my hands on the Gartley book in 1971. No, wait, it was 72. Nope, 74. It was 1974. Don Mack at the what was the name of the institute? Oh dear, it was Financial Institute on Santa Monica Boulevard, right down from the Conti office on Westwood in LA. And he showed me the book, and he said this was the best book that he had in his in his whole library. And it was originally cost $1,500, and he allowed me to Xerox it at 25 cents a page. And at that time, it was a lot of money because it was 600 pages, I believe, and it was the best money I'd spent because it was really a fantastic book. And Gartley had died in '69, so I was never able to talk to him or any of his relatives. He had gone through a couple of wives, and there was not a lot of happiness in the family, so not many people would talk to me. I was able to talk to people in the what do you call it, the W.D. Gann. I was able to talk to two of Gann's children, both of his boys, the bond trader, Dean Witter, and his son, who was a dentist. The daughter wouldn't speak to me at all. She wouldn't even, every time I tried to call, she would just hang up on me. I tried 3 times, and the boys said that she didn't get along well with her father, and I ended that. So that's neither here nor there. Okay, this is what we're watching here today in the market. Whether that was just a one-day Corrigan yesterday in the market, we'll have to wait and see. But if we give up most of what we gained on yesterday, which is really hard to do on a Friday in triple witching, then we're looking at really big trouble, folks. I mean, you just don't want to be involved with this. And I will tell you this with 100% belief in what I do here, is that when we go below that June 8th low, okay, turn the lights out, because you're not going to see a bull market in stocks for a very, very long time. A very long time. And we go through the lows of March 13th, you're going to see the biggest bear market we've had since 2000. At least it's going to be worse than 2007. I can almost guarantee that. And it'll be worse than probably 2000, where the NASDAQ gave back 85% of its money. And I'm afraid it's going to be like the one in September 3rd of the year of our Lord, 1929. I'll be right back after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I've posted into Tiger TV the chart of crude oil over the last hourly chart going the last 10 days or so, 15 days. And as you can see, we've been in this triangle with a it's actually a pennant because you're coming right to the tip of the pennant, and we have the 3 higher bottoms that we've had over since the 15th, the 17th, and again today. So as long as oil can stay above 58.50 a barrel, it has a chance to rally one more time, but I think those chances are dimming, folks, for several reasons. One is the fact that we've had a big sell-off in gasoline futures, which seasonally is very unusual. We were on the show on Tuesday, I believe. They had made new highs at $2.19 a gallon, and they dropped to $2.10 a gallon. They dropped to $2.09 a gallon, you know, very, very quickly, which is really a big drop. Let's just check what they're doing today, because this is a seasonal time when gasoline should really be going strong. It's one of the strongest seasonals that we have, you know, with commodities. is the gasoline, and boy, it's not doing much except going down. So it looks, in fact, it's made lower lows than we've had over these few days. So it's looking far weaker. Had been the leader, and now it is far weaker in the complex. And as you can see, it's heading down toward the. Looks like it's going to, with the ABC structure that's here, it's going to take us to 195 a gallon in gasoline, which should put some pressure onto the crude oil itself. So we want to be be watching that. Now I want to end the show. We've got just a few minutes left, as I recall, and I wanted to put up the chart that I basically started this whole thing with, and that is the New York Stock Exchange Index, because we have completed a perfect Gartley pattern. It cannot get any better than this, right out of the textbook. And if you've ever believed that textbook, it's Profits in the Stock Market by H.M. Gartley. The best book ever written on technical analysis, hands down. There's not even, there'd be a lot of people for second place, but he holds first place for this one, as near as I can tell. And I've got a library of several thousand books that's the number one in the whole thing, and the 50 pages there are great. So live every day in an attitude of gratitude, and have a wonderful weekend, and we'll see you the first day of summer on Monday.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.